What?
Santa Claus left the North Pole. He delivered a bunch of gifts, and he's delivering another day of the Santa Claus rally. We'll cover that. We'll talk to T3 Trading, see how they're approaching the holiday markets. Intel getting near 50 bucks. Happy about that. BMY makes another deal. I mean, this company's buying growth. It's Tuesday. It's pre-market prep. Let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. We're starting out in the green by 5.5 handles at 48.1075. The buck up just a couple pennies, 101.37. Bonds not up much, 5 ticks, just under 124. Crude tacking on nearly a buck, 74.46. Gold working its way back to 2,100, up 460 at 20.7370. Silver following suit, up 7.5 cents, 24.64. Bitcoin a little weak today. Let's see if we can hold last week's low in Bitcoin. That's down $975 at 42,790. Let's bring in Triple D. And Triple D, real quick, I have two non-market related things to talk to you about. Are you there?
Yeah, I'm here. Can't hear me?
Okay. Yeah. No, you just came on.
Switch
okay.
mics, Dennis, for me. I think your mic switched off.
My mic switched off? Okay, let me just go see. How do I do that again? Money Mitch, that's why we need your
settings, and then
webcam, audio.
Just check it.
Here it is. I'm in there. Communications. We're looking for not the webcam. We are looking for electric headset.
There we go. I had a feeling something happened.
Yeah.
Okay. So, yeah, Mitch, you pop on here too, because this is holiday talk. And all right. So, Dennis, did the elf on the shelf do a proper reconnaissance mission for the holidays?
Yes.
Okay.
Yes.
I
it did.
It did.
You did the research on it.
Yes.
Yes, it did. Yes, it did. I had to do the research on that as well. And yes, it did.
I don't know what it was. Of course, whether it's a holiday or whatever, I still wake up at like 5:36 in the morning, came down on my computer, and I see a big article about Elf on the Shelf. Yeah. And I started to read it, and I figured it out because I kind of felt like a dummy. So
I didn't know anything about it either. Before we got it this year, I knew nothing about it, and obviously, I had to learn a little bit as we went along here. So, yeah,
right.
So yes.
Oh, and then my second thing, and I'm so Michigan centric that leading up to the bowl game, I'm wearing Michigan stuff, but I should be wearing a Lions shirt today.
Yeah. I mean, this is the first division title in 32 years. Just unbelievable that, it's been this long, obviously, since the division title. But I mean, do we have a chance to actually win our second playoff game this year? Because we've had one playoff victory since we've had the Super Bowl. Do we have a chance to get that first one?
Well, listen to this. I know y'all are hating this because it's sports.
No, some people like it and the other people hate it. There's nobody in between, though.
And Mitch, we'll bring in Mitch in a second because I like. I got
cheers for Miami. Miami's had lots of good stuff.
Yeah. So San Fran lost last night. So if Detroit Dallas on Saturday night, if Detroit wins that, they have a shot at home field advantage throughout the playoffs.
That'd be insane.
That time would be insane. But we'll bring in Mitch here, and we'll talk. The Finns look great too. I'm so glad they beat Dallas. And you want to hear a funny story? And Lisa always gets mad at me when I tell this story. When I first met her, I'm like, "Oh, you're a Lions. We're Lions fans and stuff." I'm like, "What other team you like?" And she said, the Dolphins. And I
Fins,
go,
baby.
yeah, the Fins. I go, why? She goes, I like the dolphin on the helmet. So
Can't
yeah,
not like it. The Dolphins.
yeah.
man, come
So
on.
all right, let's turn our.
Huge weekend for sports, obviously. So let's go though. We're not gonna. It's not stocks and jocks, Joel. That's on your Tuesdays.
You guys
did.
What is Tuesday? I forget. It
You
feels
should
like
have
Monday.
talked about what you got for Christmas, guys. You guys didn't get any gifts, man.
I did.
Come on.
Didn't you see my tweet? I tweeted out what I got. If you go to my Twitter feed, you can actually
Now
see
that's what we
Santa
should be
Claus got
talking
me.
about.
Go to my Twitter feed now. You can actually show. I showed.
I
my
love it.
stocking.
I'm on my
And
way.
it was a beautiful stocking, and it was an advertisement for Miller Lite. I'll tell you that because I got a stocking full of Miller Lite, which was just excellent. It was the Miller Lite themed Christmas for me. Probably why I'm a little bit tired here this morning. So
you were watching movies too, I see here.
Back to the Future.
Yeah.
The boy had this little car. I don't know if you showed
Okay.
that. Yeah, we were watching Back to the Future, the best movie ever made. There's the stocking.
there
It's
it
beautiful.
is.
And you might as well show the video too before we get started here. Go
Are
back
those the
up right
old
to-
Miller Lights that just get stuck in the cooler and then you just you put them on the
Miller Lite, and then go up to the top, the very video that I just posted because the boy got this rated. Not that's an advertisement. This is he's got the remote control car, and I went upstairs and he's like, I created this, and he's got this. This is the daddy delivery service for the Miller Lite. So it comes over, and it goes and it works. And I didn't twist it right on the video, but then we go. I was doing my
that's
left
called the proud
hand.
papa right there. That's
I
a
was
proud
holding the
papa.
thing with my right. I don't usually crack a beer with my left hand, so I missed. But and it comes. He's actually sitting right here, the creator of that. So AI powered, Elon Musk. If you're watching, we'll sell this company to you for $1 billion. But this
I love that. I love
I need
that.
an autonomous beer delivery system.
That's
yes,
it.
I need an autonomous.
Well,
beer.
get.
We're
I
going
got.
public next year.
I got a special surprise. I was invited to a Christmas Eve dinner.
Yeah.
Okay, and I got a stocking too, and I got a little Michigan little lunchbox thing, right?
Mhm.
To put keep the food in. But look what also I got from Dana.
Oh yeah.
Uh-oh.
Do you know what that's from,
pad.
Dave?
Mouse pad.
Believe is in.
Is it a mouse pad?
It's from Ted Lasso.
Yeah.
Have
You
you
like
watched
that
that
show?
yet, Dennis?
You like that
No.
show?
I love that show.
Yeah.
You
it's
gotta
on the
watch
bucket
it.
list. It's on the bucket list.
Okay, and I got some other stuff. Okay.
Okay, 9 minutes in, we have not talked one stock yet, but
That's
is a
how
stock
we
trading
do
show. We
it.
promise
Welcome,
you people,
PreMarket prep
it is a
team.
stock trading show. Money Mitch didn't tell us about his stocking, though.
Of course, I got
30 seconds, the other people are
more
gonna
sports
tune it out.
stuff. A sports jersey, Heat Miami culture jersey, so brand new jersey. But let's get into what's your opinion, right? Because a big part of what we're talking right now is looking into next year and what has happened here in the Federal Reserve. So right now, the view is that the Federal Reserve could cut interest rates down to 3.5 and 3.75% by the end of next year. Of course, we're at 5.25 to 5.5 right now. What do you guys feel about this view? Do you guys really feel like this could actually happen next year?
Yeah, I think they're going to cut rates. I've already said that because I think the economy is.
Do you think it could get to
slow.
3.5?
No,
Or
I don't think we're going. If it goes 3.5, we got major problems in the economy. We'll say that much. If it goes that low, it's not because the Fed's just giving us a Christmas gift here. It's because the economy has fallen off a cliff. But I do think you're going to get multiple cuts. I think Powell wants. I think we got one in election year to think about, and they don't want the economy falling off a cliff in an election year. And two, is Powell's got his legacy to think about here. So he's trying to get ahead of it. So right now, the Fed is on the market side. It is why you have to be very cautious shorting. And then just into this week, it's hard to short this week too. But my outlook for next year changed when Powell flipped. I mean, I was calling, recession early 2024, and it looks like the Fed is not going to allow it. And if the Fed's not going to allow it, I learned the hard way in the 90s not to fight the Fed.
Yeah, let's talk a little bit about that too. I'm going to show an image here, Joel. You can talk.
Yeah, I was just going to say, we were definitely correct in saying that they were done, right? And as far as raising rates, and we weren't exactly sure of the pivot. And I was thinking about it over the weekend. I still think we're going to be steady. So maybe I was behind not catching the pivot, which almost except all the bond buyers out there and everyone bought the heck out of stocks, got to pivot. But I think he's going to be very cautious on the way it goes down. I think the rates going down 5 or 6 times, I think that's hogwash, unless, of course, he has data that we don't. And from what I've kind of maintained the whole time that I still see houses going up in my area. I still see people shopping. I still see the drive through at Burger King and McDonald's long. So all my indicators so far are the economy is now falling off a cliff. But Mitch, go ahead. That's a good graphic there if you want to explain it.
Yeah, I think it's an important one, right? Watching the whole kind of transitory conversation here, right? In June, he was saying that inflation had surprised again. Then July, he's saying we'll do whatever it takes to get inflation down. Then December comes and that's us thinking that we've done enough now.
That's a huge statement.
And
I mean, that statement is a game changer.
Yeah, complete game changer and an unexpected game changer,
Uh-huh.
right? Earlier that month itself, we've heard multiple experts say it, that he was still saying that they weren't maybe restrictive enough. And out of nowhere, he's saying, we've done enough. Well, I think something had to
when
change
inflation
there.
is not down to 2%, Mitch. I mean, they've preached the 2%, but they haven't got down to 2%, and now they're saying they've done enough. And I agree with him that he's done enough. I think it lags. I think the data lags. But he has not given any indication that he would, try to predict that the data is lagging. He was going to wait for the data. So again, we said last week, the Fed is now in the prediction business, apparently, and that is a game changer if you're sitting here actively shorting stocks. Thank goodness, that this is a seasonally strong time and we've been bullish. I was expecting to get bearish, and I still think we're going to have like a cooling period in early January. I still think that's going to happen. But I don't think the economy is going to fall off a cliff because I don't think the Fed's going to allow it.
I think by certain metrics, and believe me, I'm no mathematician, but Blue has said that we have come down to 2. I mean, and then you get other people saying, "Oh, but you're not factoring this, that, and the other thing," and really we're at like 8-9%. But if you've been listening to Blue Putnam, the managing director at the CME, and his forecast over the last couple of years in the route of inflation, he thinks we're already at 2% through his measures. So it's muddled. I still like, I just want rates steady. Let's see what happens with the economy. Obviously, I think, what Powell said and did kind of spooks you a little bit, that we are falling off a cliff if he's going to talk with the pivot when the market's at all-time highs.
Of course, it's a Santa Claus rally right now, and since 1969, the S&P 500 gained about 1.3% on average. So let's see what happens here. Can we get a little bit of a rally here towards the end? Of course, that's from Friday that just passed until the end of the week. What are you guys thinking?
So the
Santa Claus come to town?
Yeah, and just to clarify, the official Santa Claus rally period from the Stock Traders Almanac, if you're following that specifically, is the last 5 trading days of the year and the first 2 days of the new year. So obviously, it's not always on the same day, depending on how the holidays, depending how the calendar falls. But that's that's how Stock Traders Almanac is calculated, and that's what we've always used. And in this period, to Mitch's point, once again, it's a very strong seasonally period. And there's a number of reasons for that. I think one of the main reasons usually is the market is historically, and often has up years, and often you have follow through. You have money managers positioning maybe ahead of that. You also have a quiet period where there's less liquidity in the market, and that might push stocks. If you have a buyer, it can push it a little bit further because a lot of traders take this week off. We don't take vacations, or at least I don't, but that's why when liquidity is lower, when there's less orders out there, if you've got a real buyer in the market, it can push price further. So that's what you historically see. And I'm not fighting those trends. We've had a very strong year. There could be some window dressing towards the end of the year. I've said, I think a stock like Microsoft could end up closing up near the all-time high. So saying it could gain another 9 points this week, I think that's possible. I got spooked on that, big down day 3 days ago, but, overall, the chart on Microsoft still very productive. So usually what you see is follow through on the leaders and follow through on the laggards. And what that means is the leaders lead and the laggards lag until the calendar flip. And then the calendar flip sometimes changes everything. So you've got to be aware that once we do go into the new year, tax loss selling will be gone, and that's what often keeps the laggards lagging. And what you have is people coming in January 1 and saying, I will sell my big winner here now because I don't have to pay the tax for another year. So tax implications really is what drives the January effect, which I talk about. Some people use a different January effect, but the January effect that I talk about is leaders to laggards, laggards to leaders. And the reason for that is the tax loss selling is all gone, and people can now take profits and not play them to the next year. So all because of tax implications. So the way to play this, just short, is to buy the leaders for the first 5 days, and then again the last couple of days of the Santa Claus rally, which would be in the January, it would be actually to take those gains.
Just real quick, technical on Microsoft, kind of throwing out the highs and the lows of really for the entire month. You've had a nice trading range, and the bottom of that trading range has been in the 365, 366 area. Let me get my data window here so I can be a little bit more precise. But you see the bottom of the range, let's call it 365. And then the top of the range, I'm just going to use last week's high. Dennis mentioned that, 376. So, a long uptrend, a little check back, a little consolidation. We all know what technical analysis say when you're in an uptrend, a pullback, consolidation. Let's look to see a sustained move above 376 in Mr. Softy.
And this is historically a very light week for news as well. And that's why, obviously we're talking a little bit too. There's not a lot of news. We're going to get to that in a second. But what that means is sometimes you don't have, news to derail you, where sometimes you get into the new year and it's like, oh, all of a sudden we have new information. And your job as a trader, I continue to say this, I will always say this, is to change your mind when you get new information. You're making a trade based on certain information. Information comes out, like you get like a warning from one of the guns, or something else happens, or maybe there's a macro event, could be anything. You have to be able to change your opinion like that. That is what you are in the business. If you're a trader, you're an investor, you can ignore headlines, you buy good companies at reasonable valuations. You are a trader, you have to actively be careful for news. It's a very light news week, so technicals tend to work very well, where you're not going to get derailed often this week by some crazy headline that all of a sudden that we didn't see coming. It usually doesn't happen this week. It can, anything can happen, but this week is historically a very light week for news.
Don't be the grandma, right? Don't get run over by the reindeer. Let's get
Great
to
song.
Intel. Israel's government agreed to give Intel Corp a $3.2 billion grant for a new $25 billion chip plant it plans to build in southern Israel. Both sides said on Tuesday this is the largest investment ever by a company in Israel. Of course, Intel's been trying to expand in different countries. What do you guys think of this? It's already up there. I think it's at like 49.18 right now, 49.18, 49.17. Let's see if this can keep going. Will it get to 50 by the end of the year? I mean, this has changed tunes completely. I mean, we were close to 25.
Yeah, and I messed this trade. This was in my long-term portfolio. I messed this totally up. I wrote calls on it because I was like, wow, it doesn't seem to be going anywhere. And then I got called away and never bought the stock back. And, here we go. The thing's up at 49. This is the downside of writing calls. You take a lot of downside and you don't get the upside sometimes. And, because a lot of people just write calls all the time saying, what do I have to lose? When the market crashes, you find out what you have to lose. And when the market really rips, you find out what you have to lose because you don't get the gains that everybody else does. So that is the downside of writing calls. Calls works great in a sideways market, slightly up market, oscillating market. It works well. It doesn't work well in a ripper because you lose all that opportunity cost. Doesn't work well in a crash because you take all that risk still. So anyways, learning the hard way. I've always learned the hard way, but it seems like whenever I write covered calls, I'm always regretting it.
Let's see here. I guess the best way to put this would be if I was Intel and I was building a new plant, I don't know if I would do it in southern Israel. But that aside, I would just look at the pre-market high. Pre-market high comes in at 49.30. There's got to be a boatload of stock at 50. You peaked in April of 2022 at 49.90. It's just a big number. It's a target. I mean, there's got to be some big size there. So at least I think the first couple times up, the high freaks will be stepping out at 98.99, buying it back at 88.89, pushing it back up. The old tractor beam, which we haven't talked about in a long time. You're not exactly getting a running start in it today. But I like it's gotten back half of this move. Full disclosure, I've been long this thing for a couple years, and I'm not exactly sure what my average cost is. But keep an eye on 50 short term. I haven't been there in over like a year and a half.
It got sexy again, man. For a while
Yeah.
there, even I was, I was like, man, Intel's out. But I remember,
Well, I
was it
was
the
too.
mention with
Yeah.
Apple? Was it that really got it going? I know it was. Oh, I think it was was it Nvidia? I remember when it first gave this first spike, and that was like towards the 34. It was a mention with a bigger company. I can't put
remember
it.
the company.
I can't
either,
remember
but
the company, but that's what changed it. At that point, all of a sudden, it became sexy again. Then it became an AI player, right? Everyone started looking at it for AI. Now look where it's at. I mean, almost up what 100% for the year.
And this has just
Yeah.
been
doesn't look too bad.
and in the last 2 months, Mitch, let's not discount what has really moved stocks in the last 2 months, and it has been the laggard rally. I
Yeah.
mean, if you look in the last 2 months, yeah, Apple's up a little bit. Yeah, Microsoft is up a little bit, but nothing like the IWM, which is just ripping. So the laggards have picked it up in the last 2 months. We went from, we've had a lot of stocks up 50, 60, 70%. ARKK ripping higher, was sitting near the lows at the end of October, closing the years near the highs. This has been a ripper rally. So I still think lots of people sitting on lots of gains, actually, even short-term ones, and they're probably like, give me the calendar turn so I don't have to pay tax until a year from now. So I do think you're going to have a rough first week of January. I don't know if there's going to be follow through though, because I think the Fed's got the markets back. But I think this week still sets up well. Follow through here. Intel, $50, huge number Joel Khan just gave you.
Bristol Myers Squibb adding premier radiopharmaceutical platform with an acquisition of Ray's Bio for $62.50 a share, and a deal's worth $4.1 billion. This morning when I read this headline, I was like, is this just a repeat headline?
Yeah.
Oh no, this is a brand new company too. They're on a just straight streak.
Oh yeah.
It looks like Christmas came for these companies, and Bristol Myers is definitely buying.
Bristol Myers just hungry here, just buying
know.
everything up here. It's like 2 days in a row they do a major sizable acquisition.
Yeah,
This is good for small biotech. This is not in the XBI, so I don't believe it is. I just did a quick look. But with that being said, it gets people excited about, smaller companies. Biotech has been running. We know we've had a lot of M&A lately in the XBI. I've been doing that trade. I talked about that trade over the weekend, just being long XBI on Fridays and selling it on Mondays, because it seems like we're getting deals and it gives you exposure to all these companies. And typically these deals get announced on the Monday. Today is obviously the Tuesday, but after the weekend. So I still think the trade is there. Long XBI on Friday, selling it on Monday, or in this case, it would be Tuesday. And if you did that, man, you're picking up some pretty good money here again, because the XBI is trading up 1.31%.
And what's the company? I wrote the symbol down and then I wrote something over it. It's like RX something. That's Ray's
Bio. It's RYZB.
What do you know? I'm throwing you under the bus here, but do you know what they have in the pipeline? Like what they're obviously going after some specific drug.
I think it's
oncology. The only reason I asked that, and like this is way above like what I follow in my pay grade, but this might be bad for like if you have another biotech stock and it's down today, it may do your research. It may be related to this. I just want to alert our traders, investors. You got a huge level here in BMY, not a daily, not a weekly, but a monthly level here. Last month's high, 53.55. This month's high, 53.48. Trying to break a 1, 2, 3, 4, 5, 6, 7, 8 month losing streak. We're poised to do that right now, but man, that 53.50 area, if I could put stars all the way across the page, which I could, but it would take too long, mark that, Dennis, 53.50. Maybe you should add to a winner if it goes through there, but that's not investment advice.
Yeah, I'm long BMY. I'm going to stay long BMY. And actually, when they did the acquisition, I believe it was Friday. Was it Friday they did this? And then they do another one?
It just seems like they're on a buying streak, man.
Yeah, but the stock was trading down and ended up closing higher. So they're starting to get to a point where they're just like, we like that. They're picking up smaller companies and trying to buy growth. and trying to like rebuild their pipeline here. I mean, Bristol Myers has been a dog for a very long time. I just bought this 3 weeks ago, so I bought it as a dog. And I'm buying it as the laggards become the leaders become the laggards to a certain extent as well, thinking that maybe a stock like Bristol Myers could pick it up in 2024. So, but again, investments, buying good companies at reasonable valuations. Bristol Myers is definitely a reasonable valuation. And it gives you a nice little 4.55% dividend here too, which I don't think is going anywhere.
You know, sometimes some of the best trades are when the mentality in the current environment is on the complete opposite side. And I think that when we were going into, of course, late October into November, a lot of the mentality was that the consumer was slowing down, right? And then we also talked about it here on pre-market prep that we expected to see some kind of holiday push, right? And that the weakness could come after the holidays, right? Well, one of the easiest plays I think that we could have been looking at is like an Expedia or a Booking, right? Let's talk about holiday air travel here, and then we can also take a look at the airlines. 23 holiday air travels surpassed the numbers from the same week last year. TSA screened over 17 million passengers last week. This is up 4.9% from the same time frame last year and 3.3% higher than pre-pandemic travel, which is the important part I think here to focus on, is that we truly have come back from the pre-pandemic travel. Overall, you can definitely see things are a lot better than what they were, of course, from the pandemic time. And we're actually traveling more than we did in 2019. Expedia, Booking, these stocks have been ripping. Leisure has been great. Can this keep going into 24?
I think it can go to 2024. Just be careful chasing all this stuff and saying, yep, it's going to be a good year because of that January effect that will be coming on January. You only got 4 days left, so you can milk these. And if I was long, maybe you do milk it. You don't want to take the gain either. But I mean, Booking's at an all-time high. This is the kind of stock that gets hit in early January because people are like, okay, I can finally book my gain. Pun kind of intended. Expedia, same story. I mean, the stock's been a monster. It's come back a long ways. It's not at all-time highs, but it has a hell of a run here. And we're talking about a run from early October of $93 to $155. So it's a stock's up 60% in 2 months. If you're buying it here, you are definitely chasing. Like I said, I think it could have still a decent couple of days. But I think when you come to January, I think it'll be trouble. Expedia, full disclosure, I do have a day trading position in that too.
Holding 150 longer term, that's a 50% retracement of the big tumble. BKNG, I mean, what do? You just, you're long and strong. I don't know, maybe move a stop up. I hate talking about $3,500 stocks.
Yeah.
The jet, I mean, if you want to just keep a broad measure here, keep an eye on the Jets ETF. Kind of bunching up. It looks like you got a concentrated seller at 1940, 1950. So that would confirm another leg higher. But just one other airline stock I want to mention here. If ever I was talking about Southwest, and I'm like, well, as long as they don't cancel a bunch of flights. Well, they canceled flights. It's not hitting. They had to cancel flights over the weekend.
Yeah, they were the airline that struggled through the holidays. Let's just say Southwest isn't what it used to be, right? I mean, everyone used to be like, oh, it's the best customer service ever. Now they just don't even answer the call anymore.
When I lived in Chicago, I used to be able to fly from Chicago to Detroit for $9.99, and the back rows faced each other. Does anybody else remember that?
I remember the back rows facing each other, but I don't remember the $9.99 flight though.
All right, guys. We'll see what happens with these airline stocks. Do you still got American? Dennis?
I do, yeah, and I
well,
probably
you held it longer than
it.
I did, man.
I mean, it's but it was stuck in the investment portfolio. It wasn't in the trading account. I try not. The biggest problem I have again is over trading the investment account, and I do that probably because I'm an active trader, but I also do it because people, because I like to disclose my positions in the long term side. Oh, I disclose on everything, but I mean, when I'm talking the long term side of disclosing, people know you're in it, and then people really are all over you. On all the, what are you doing now? What are you doing now? What are you doing now? I'm like, well, it's a long-term position. I'm trying not to look at it. Well, it's a long-term position. I'm trying not to look at it. What are you doing the next day? People are asking me like crazy about Bristol Myers because I just put it in the portfolio 3 weeks ago. I'm like, well, I'm holding it because I put it in the long-term account. It wasn't in the trading account. So I'm trying to hold on to it. Good companies, reasonable valuations. I thought American Airlines was reasonable valuation too. Obviously, I was incorrect. It's come all the way back. I'm almost back to even on it. But I still think it's a reasonable valuation. I don't know if the airlines are always a fantastic long-term investment. They've been really long-term underperformers, but I just don't think people are just going to stop traveling. And I mean, this was a $60 stock at one point in time. I don't know if it's getting back to there anytime soon, but $14 is not an expense. This is not an expensive company.
I still remember we should have just bought Royal Caribbean when I came back from.
Oh gosh,
that's that little dot right here. Look at that.
The
thing.
little low one.
Look at that thing right there.
Mitch.
Now we're up here, man. What the
Yeah.
hell?
Well, what about
boots
what they
on
said?
The ground indicator or boots on the sea.
What about what they told you? I mean, at the last earnings report. The last earnings report, I don't know if we can pull it up at Pro.
Yeah,
they're like, we are overbooked. I mean, they told. I mean, the best information you can. They told us. They told you.
I told you guys. All right, let's move on to Manchester United agreeing to sell a 25% stake in the billionaire Jim Ratcliffe for $1.3 billion. I thought they were trying to sell the whole company, not just 25% stake. So
now they're only selling stakes. They're getting rid of 25% of it.
Yeah,
So
they're only giving the New York Strip here, not the whole thing.
I mean, people again so excited. Those algo jumpers there. This thing trade over $23 this morning, Joel, or $22.
Yes, it did.
Over 23, up to almost 23.
22.48.
People get so excited. Those algos, they're so excited algos.
Yeah, man.
I mean, it's giving it all back. Is there a point here where it's come all the way back in here now? Will somebody think it's worth more? I think it's productive at $20 actually. If you can get it all the way back down there after you're getting all this new news in there that there is somebody that actually just paid a higher stake, I actually think maybe it is a buy at $20.
Busting out, man. You've been 1920, like boom, 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 boom. Potential breakout here. Got up into this gap area, but what I would like to see is establish. I mean, you're up 55 cents, good volume. I mean, establish a strong 20 bid here, and I don't know where the valuation comes out with what the guy paid and everything, but you get a strong 20 bid here, and this kind of fits a little bit of your laggard description too, as well, Dennis.
All right.
Yeah, I think Manu. I think I like it here at 20. Somebody liked it higher than that, so when they're buying 25% stakes, so they know more than I do. So I don't mind it here. It's come all the way back in. I wouldn't have bought it at 22 this morning, but it's giving you this new information almost flat. It's only up 2% here now, so I don't think it's that bad here.
DC Studios continues their struggle in the box office as Aquaman and the Lost Kingdom collected an estimated only $28.1 million during its domestic opening. This is the fourth lowest debut for a DC extended universe film. The film was expected to open between 32 million and 42 million, so big miss there. And of course, the first Aquaman had 67.8 million. So just give perspective. Definitely seen that come down. I watched Universal's other movie there too, Illumination's animated comedy of Migration. I don't know if you guys heard about that one with the ducks, they migrate south. Got to watch the kids movies, but definitely they've been struggling here. Warner Brothers can't get things together. They're pulling back already. Disney tried to make a move recently, has been just going sideways. What do you guys think about these streamers?
I don't know anything about this movie. I never heard of this movie until you just mentioned it, but I'm not a big fan of all
You don't know
these,
the Aquaman?
Not a big fan. The only Aquaman I know was the He-Man toy when I was a little kid. It was Aquaman. It was a little green figurine. I can remember that one. But I'm not a fan of all these superhero movies. I just never was.
No, either am I.
I don't know any of these things. But WBD doesn't seem to be caring this morning.
I just think DC, Star Wars, all those brands have lost their touch.
Oh, don't touch Star Wars. Yeah.
They've lost their touch, though, man. They're not watched anymore as much as they used to be watched, Dennis.
They just don't watch. The kids just don't go to the movie theater like they used to.
I mean, they over-milked it. I mean, the movie theaters was packed. I should have took a picture. That thing was slammed.
What? This stock's not doing much. Which one I said that Redbird Capital was sniffing around in? What one was that? It wasn't Warner Brothers, and I think it's a stock that Warren's been in too. It was a streaming company.
Was it Para?
Yeah. What's the symbol on that one?
PARA, Paramount, right?
Oh man,
PARA.
Yeah,
Paramount.
of course that didn't come to fruition. But there is a movie that I
Warren
want to
does have a
see.
good touch there.
There is a movie I want to see.
What?
Iron Claw.
Iron Claw? Okay.
Yeah.
Never heard of
I
any of
told you
these.
guys Wonka too. I enjoyed it. The Wonka movie.
There's too
the
many
new Willy
Wonkas.
Go check it out,
Stop
Dennis.
remaking stuff and start coming up
Dennis,
with new stuff.
Go watch it. Take the kids.
Okay.
Get
Oh,
Dennis-
it's a
hour window.
prequel though. It was a prequel, right?
Yeah, prequel. I'm telling
Hey,
you.
Dennis, the Iron Claw is about the Von Erich brothers from wrestling, professional wrestling. Do you remember them at
Which
all?
brothers too? Stop.
The Von Erich brothers.
I don't remember the Von Erich brothers. What years
Yeah.
was this?
Early
It was like-
80s. Early 80s. It looks intense.
Were they in the WWF?
Uh,
The Von Erich brothers. I do not remember the Von Erich
The
brothers. but I am
Wildlife
Googling them.
Federation?
I've heard of them, but I don't remember watching them. So I'm wondering when they were. They're probably from like the 60s, Joel. Probably way before.
It says 80s, Dennis.
In the 80s, it was all about Hulk Hogan and King Kong Bundy and Big John Studd. I don't remember no Eric brothers. I'm probably brutal.
All
They were
right.
huge
Well,
back then. I think it's the 70s. I think I
one
was like
thing's for
2.
certain is I'm sure there's people been adding
Joel's so
some
old.
streaming services. Do you guys think that we're gonna get some good numbers from streaming services going into the next year?
It's just so many of them. And you know what also really makes me mad is like they're even slowing down Comcast now. Like you got to go to something and then you go to Amazon and I got to ask Lisa for like, what's the password?
Yeah.
And then you go back to something else. And then it's like, I just want to click. Channel 2, Channel 4, Channel 7, Channel 50. You know, boom, 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 boom. Back and forth, back and
No,
forth.
that's not the way it works, man. It's all
Oh,
about
I hate
apps.
it.
Apps. You got to close
Oh,
one, go to
man.
the other.
On
whatever
cable TV, the advertising is completely out of hand. It must be because they're hurting so much, but it feels like it's more advertising than show now. It used to be like, you know, you'd have your 22-minute show and 8 minutes of advertising. I feel like it's 15-15 now. Like, I don't know if it's true, but it's just the ads go on forever. And I was watching a movie. I can't remember what it was. It was just on normal cable TV. And I finally got fed up. I'm like, the ads are just out of hand. I actually closed cable TV and I went and streamed it because I didn't have to watch the dang ads. But I mean, the people are going to continue to cut the cords if they want to advertise that much to us. It's completely out of hand. I don't know what Comcast is doing with and what all these
you don't like 3 minutes and a half? You don't like 3 minutes and a half of commercials, man?
No, it's brutal. It's absolutely brutal. The 2 hour, the 2 hour movie's 4 hours now. It's just a joke.
You want to know? You don't even know what's more
fed
brutal?
up with. I'm honestly thinking of cutting the cord myself. You know, just streaming everything, just because. And if it wasn't for sports, I would have did it a long time ago. But I don't like the lag when you're streaming. You get the lag. You know, I don't like my buddy texting me and 16 seconds later there's the goal because he's on traditional. And I'll tell you, like on when you've got cable and I'm not streaming cable, I'm on a digital cable box. I'm honestly 30 seconds ahead on some of the sporting events, 30 seconds ahead of the stream. So once they can figure out how to stream quicker, then
that's one thing
it's
you
really
gotta
over
deal
for it.
with.
The only reason I stay is because I'm watching the sports and I don't want the lag.
You don't like a little lag, man? Come on.
No.
Man, well, just to highlight this point, do you know, and of course I'm still going to keep my Michigan football tickets and everything, but now the TV timeouts are 3.5 minutes.
Yeah.
So you go, and there's a guy, I don't know why they have him wearing a red hat at Michigan Stadium, but he stands on the field. He has a red hat on, and he stands there with his arms folded, okay? And then when they can't start the game until he leaves the field, so 3.5 minutes. So let's say there's a touchdown. Michigan scores a touchdown. They do a kickoff, and then someone does a play, and then someone gets hurt. There could be 7 minutes of non-football, 7 minutes of commercials in a matter of 9 minutes. And the final story on this, and my dad, who was ahead on some stuff, behind on some stuff, but he hated TV at football games so much. There was a Michigan football game. We were playing Ohio State, and there was a goal line stand. Ohio State was trying to score, And back in the old days, they used to have these carts that went on the sidelines, right? Because they had the cameras, and the cart was we're pretty high, but the guy sitting in the filming it was blocking our view, our total view of the goal line stand. And my dad wanted to go down on the field and knock the guy off there, and we had to hold him back. And I can't remember if we held him or not, but
Well,
I mean,
TV pays the bills.
I'll tell you one thing. I was watching Dennis the Menace this weekend. Dennis the Menace, man.
how much is
Dennis
that?
the Menace,
That kid was
man.
trouble, man.
How much is that going to cost, Jason?
We're advertising for him.
That's for
the movie.
they could pay it, man. No worries. Dennis the Menace, man, himself. All right. I mean, that's what I
I
always
was a
think
bad
about.
kid. I was never like that. I was always a good kid. I never got anything at all. That kid was bad, man.
That boy,
Boy.
Dennis the Menace.
Yeah.
All right, let's keep
Double.
going, team. Let's talk a little bit about some other stocks or maybe what's on the shopping list, especially as we get closer towards the end of the year. I think we should think about that. One of the trades that I'm thinking about, and I wanted to throw it to you guys, and I would never usually think about these, but starting to make sense charts-wise, story-wise. What do you guys think about utilities and maybe playing something like Duke, Excel? There's so many names I could bring in here, right? We can do Southern Company. I mean,
Yeah.
I like Excel and Duke just because I've used them, right? And I've lived in that area, like,
Yep.
trade what you know kind of thing. But what do you
Yep.
guys think about utilities overall?
I mean, utilities have been hit and they're down, and they've obviously come back a little bit here, but they were hit because higher rates. Why I've said for a long time, why do you want to own a utility stock when you get 5% risk free? You're getting a 5% dividend. I mean, it doesn't make any sense. But we're at a point here now where if they're going to start lowering rates, it becomes an interesting trade. So I've slowly started, not utilities, but they're all the same thing. Preferred stocks fall into the same category. These are trading like bonds. Longer term, these companies are stable. The cash flows are stable. Like you said, Mitch, you use it. I've talked about Enbridge before because I use it. I pay multiple bills to Enbridge every month. I mean, these things have been down because we thought rates were going to stay up forever. If rates start to come down and come down significantly, then that's a game changer, and these stocks actually probably do outperform. So I think there's a place here to start looking at consumer staples. I think there's a place here to start looking at utilities. I think there's a place here to start looking at preferred stocks if the Fed is going to start cutting rates.
Dennis, let's look at this chart here. Though this is a different looking chart here than the equities. I mean, you got the pop. It's almost like they don't believe that rates are really going to be going that low. Here, let me share my chart. Look at this XLU chart. Does this not looking like an equity chart here? Look at this. You had to pop to 67, 66, 70.
Overshoot.
Yeah.
Mhm.
Okay, so do you just load up and lean on 62 here, and then
That's what I'm thinking, Joel. That's what I was thinking. Like, I could see that, and I'm wondering. Go ahead, Dennis.
No, I'm with you, Mitch. I think it's a good point you bring up here. I don't know if I'm necessarily going to utilities. I mean, the XLU yield is only 3.43%. I've talked about General Mills for a while here. GIS lifted. We talked about it 62, 63, ran to 68. It's come all the way back down. And you just don't wonder if you're getting into, maybe people just aren't going to ever eat cereal again. We're just done. But these are consumer staple things. General Mills is, making, stuff that people just buy. And I don't know, where is the PE? It used to trade with a ridiculously high PE, but I think that PE has come down to a reasonable level as well. So going to our trusty Benzinga Pro, typing in GIS, just using their data in here and looking at the PE. I mean, the PE on the forward basis is 14. I don't know where it tracks. We need that PE chart, you know, that you've always talked about, Joel. You need a chart just tracking PEs. But I can remember General Mills trading with a PE of over 20 at one time. So, I mean, a PE of 14, we talk about buying good companies at reasonable valuation. General Mills has been a good company for a very long time. If you believe, and it's a big if, that inflation is beaten, and if you believe that, you know, labor inflation isn't going to harm them and margins aren't going to get squeezed further and they can pass through all their customer prices anyways, if you believe inflation has been beaten and if you believe interest rates are actually coming down, General Mills is probably a buy here. But, and to your point, the utilities, it's all the same argument. Preferred stocks, they're all kind of the same thing, trades as bonds. But if inflation starts to tick higher, that's where stocks like this are going to be getting hit. Because one, it's not just the fear of higher rates coming back, it's the fear of margins getting squeezed. Inflation does not help these companies. They can raise prices of cereal, but it pisses everyone off. But if labor inflation squeezes the margins or anything, that can be an issue. But I think it's an interesting conversation at this point in time.
Definitely something that, go ahead, Joel.
I know Elf on the Shelf, I think, was on some cereal box too. I think I read that in the article.
That's why you want it. That's why you got to get it, because the Elf on the Shelf, right? No, I mean, these stocks have been kind of just forgotten, just sitting on the sideline, right?
They're forgotten.
They're forgotten. That's just what it is.
And I think there's a play there. I think maybe, you know, if the narrative has indeed changed, if we are indeed going into an interest rate environment where interest rates are going to be starting to come down, these stocks have been punished severely because of higher rates. So I think you start thinking about it. Like I bought more Loblaws preferred stock. I've been loading up on the Loblaws. It's the symbol is L in Canada. If you're Canadian, the preferred is L.PRB. I bought more of that last week as well for the simple reason is that I think rates have peaked. And if I go to Loblaws, the stock itself, it's the biggest grocery store in Canada. And if you look at the long-term chart, you can't bring it up because it just trades Canadian. But if you bring up the long-term chart, it's at all-time highs. Like Loblaws is killing it. The stores are just busy. They do everything right. So you're buying a preferred stock in something that is obviously got, you know, the ability to pay their dividend. The dividend is now 6.39%. It's come up a little. Yeah, it's not a bad dividend. That's a long-term dividend, 6.39%. The preferred stock used to trade at 25, it trades at 20. So I think in this case, not only do I get the 6.39% for waiting, I think eventually that preferred stock could get back to 25 and I pick up, you know, an extra, 4 points on that if it does get back to 25. So I think there's a play there. These are conservative investments. You're not making 100% on your money. You're just, adding, some income to your portfolio. So building the long-term account.
ACI, I see you, Joel. We'll see if that ever gets through there and starts to make a move also. But we got our guest today, guys. Smash the like. We'll get right to it. Let's bring on Christian Tharp. All right, Christian Tharp, CMT, Chief Technical Analyst, of course, and ready to get to the action, of course. Let's talk a little bit about what's going on in the market. And do you see Santa Claus coming to town? Because it seems like definitely been bringing some green on the screen. What have you been seeing, Christian?
Well, I tell you, first off, great to be back with you guys. Really enjoyed it the first time, so glad I could be back. You guys are actually kicking off my vacation today, so
nice.
You guys and I'm on the road. So, but that's how much I love the market. I think, I know historically, when it comes to the Santa Claus rally, it tends to be a positive stretch more often than not. One of the things that I've tried to remind my students of going into this week was just to remember that it's not like an overly bullish bias, right? It's just more of an indicator, not a, seasonal thing. Right now, it's like it's a market that doesn't seem to want to stop. It does to me seem as if we're running out of gas a little bit. We're at least stopping to think about some things. But I think maybe we push through. I think we maybe get this 7-day stretch positive, and then I'd be a little bit cautious going into the beginning of next year.
And of course, as we get closer and closer into next year, we'll be thinking about the January effect and how that might come into play. Of course, we've been seeing the IWM's recent breakout. How do you feel going into next year? Where do you see some strength maybe early on? What are you going to be looking for? Is it small cap, middle caps, or are we still looking at the large caps?
Well, I think you hit the nail on the head. The small caps have been doing awfully well. I think what did we have historically? The fastest switch from 52-week low to 52-week high on the Russell just recently.
Right.
And that was
Mhm.
heck of a stretch there. So
Yeah.
I think it's hard to look away. I know that when my watch list is formulated around a lot of small caps, moving a lot of pretty good, I would say, explosive moves at the upside. So I know that I like that area anyway. But I'm watching things like some of the, panning out, like the more aerial views. So keeping an eye on Bitcoin, keeping an eye on
Nice.
oil.
How do you feel about Bitcoin?
Well, I tell you what, we watch it. I'm not a huge crypto person, but I think as we joked the first time I was here, just a chart's
Yeah.
a chart's a chart, right? So throw it in front of me.
Exactly.
What I do is I always analyze Bitcoin, like the big dog in the fight, so to speak, for my students, and then they can decide to, handle the individual cryptos as they see fit. If you go back when Bitcoin finally pushed through that 30K, 31K area, our forecast at that point was a run to a minimum of 45K. If you look back, 45 historically was a meaningful number. And sure enough, if you look over the past few weeks, that's where Bitcoin is just hovering underneath that 45K number. I think eventually, Bitcoin takes that out and moves higher. But when it comes to technical analysis in these levels, any number we were talking about C limited, SE, and the fact that it just has nothing to do with Bitcoin. But like if you look at that chart there, you're going to see pretty good what appears to be a continuation head and shoulders pattern sitting on top of that 35, right? So on one hand, we have this bearish setup, but as I tell my students, you want to wait for it to prove that to you. So same thing, even though I think that's going to break down based on the price action that it's given us, I look back at Bitcoin, I say the same thing. The price action to me implies we're going to break through that 45K, but I would wait to see that happen before I acted.
Definitely. I know that a lot of people will be watching to see what happens there in Bitcoin. Some people talking about 100,000 next year. Let's talk a lot about what sectors and industries you're looking for outperformance next year. Do you think it will be continued in technology? What are you looking at, Christian, going into kind of sector and industry talk?
Well, we are looking a little bit. I think it'd be worth taking a look at materials and industrials and financials going into the year. Especially look at how they have performed as of late. It does appear over recent weeks when we do our sector rotation, the materials and industrials have been moving up the ranks a little bit for us. So whether that, like for example, just looking at the last week, how the tech names kind of lagged a bit, and that has been happening. So it does look like there's this rotation going on. We are specifically watching gold and oil to give us the cue to start taking a closer look at those. Oil has been in a pretty good down channel over the last 3-6 months. And we're watching to see, you can kind of see, just visually look right there in the upper right, pretty perfect channel you can see. And so we're watching to see if we can take out the top side of that channel, which on my side seems to look like it's in the general $76 area at this point. Probably comes down to 75, 67 on the downside. You can see it over there on the left. If oil were to take out that 67, that to us would say, all right, never mind. Maybe we want to be bearish on that. But we're watching to see if oil can take out that top side of this channel here. And watching gold, big level at 2085-ish. If you look back the past few years, failed to take it out. I think I might have been on the call with you when it took its first shot at it earlier in the month. And sure enough, this past week came back up there again. So if we see these happen, then we're going to lean more into those kind of energy names. And again, that tends to favor things in the materials industrial space, we've noticed as well. And then we're also looking to see GDX had recently broken out of its own little inverse head and shoulders. It is holding above that. So if gold can take that out, then we're also going to take a look at some of those gold names as well.
Excellent. Something definitely to look at. I've been watching also those materials, seeing what's going to spike there. Gold, silver being the talk. I've also watched some coal players, so keeping that on watch. And Christian, where do you see maybe opportunity that maybe a name that somebody isn't watching, right? I always like to talk about names that maybe isn't the sexiest name, but still with a really nice setup on the charts. Any chart out there catching your eye, Christian?
Well, we're on the same page, Mitch, because I brought two sexy names and
Nice.
then one not so, which was the SE, one that I don't know that too many when you go through the news feeds, too many are talking about. We're watching that for a potential bearish or bullish play. So if you look at the stock, 35 is about as clear as sunshine. If that breaks below 35, for those looking for bearish plays, I think you got to take a look. The second trade that we see there is look how important that 40 level is going back. Okay, resistance a couple times here recently, support a couple times before that, resistance a couple times before that. So if we see that stock move above 40, we think we've got a bullish trade up to at least the 45, 46-ish type zone. But the pattern over the past few months implies a bearish breakdown with that head and shoulders. So that was the one that was a little bit more off the beaten path that we are watching and waiting for its move. The way we look at it is I always say, here's your setup. At some point, that stock's breaking 35 or 40. We want to be ready to act whichever direction it goes. The two big names that I was looking at, Tesla is one we continue to watch. Tesla's, I think, something that, a lot of people are watching a lot of time. But if you look at the past 2+ years, there's a trend line of resistance that goes back that entire run that we are now testing for the 6th time. All right. So there was a failed attempt to get above it prior to its not most recent earnings, but 2 earnings ago. The stock had pushed above that trend line, failed, and came back down. For the past few days, you'll notice the stock is sitting right under that trend line. So I think Tesla is something that should be watched if it were to take out. I've been saying if you need a number, call it 260. If it takes that out, you got to be looking up in the 313 area. If you look back the past 2 years, you're going to see a lot of resistance up at 313. If you really pan out, there could be this massive head and shoulders being formed inverse on Tesla. So we could be looking at a much bigger break than we might look at. So Tesla, we're watching on multiple degrees of scale.
Christian, real quick here, just on the SC setup here. What do you like? I'm looking at the 40 here. What do you classify as okay, break over 40 a couple times? You need a certain amount of closes above 40.
Sure.
Or how do you classify it? And then also, would you risk down to the 35, or would you find an intermediate level in between?
Absolutely. So the way I look at it is that, if the stock peaks its head above 40 intraday, right? Obviously, if we wait for a close, which is how I define, hey, we have broken. In other words, the bulls were able to push through the defenses of the bears, and they were able to hold the line. Okay, if you get pushed back down by the close, right, the bears kind of said, nope, not today, right? So I look at this, that one close is my cue, right? But there's that kind of, do you want the higher probability, right? If we get the close, let's say we close at 41 today or something, or Thursday, all right? Everybody always wants to kind of be in at the closest and best. Oh, I'd love to get a pullback. What if you don't get it? Bottom line is a close above 40 to me would send that signal. I'd be setting the risk right under 40. Like if we fail to hold it, that's the barometer. If you look back a couple months ago, or just a month or two ago, once we held above 40, we should be holding 40. That's your line in the sand. Once we have taken that back as bulls, we should hold it. So I'd be looking at something like, hey, we start dipping down into the 38.5-ish type area, we could have a problem, and back down to 35 we go.
I agree. Thank you. Like always, if you guys want to stick with, of course, the CMT, Christian Tharp, definitely check him out, guys. There's the link in the chat. Like always, if you guys want to go ahead and continue building, Christian works with tons of different traders. If you guys haven't checked them out before, I'd definitely go ahead and do it. Also, does some options teaching too. So it's not just only the technicals. Go ahead and learn from Christian. Thank you, like always, Christian. I hope you have a great holiday time. I know that you're about to go and enjoy it. So enjoy that holiday time. Have a great one, and Happy New Year's if we don't see you until 2024.
You bet. Right back at you guys. Have a great one. See you next time.
Thanks, Christian.
Take care. All right, let's get back to the markets. How we looking here, Joel? And we'll do a little bit of some holiday ticker time. I'm trying to give you guys a present or two, so throw it up there. If you guys got a stock, to check it out.
Joel's on mute.
No the good old-fashioned mute button.
He's good at that.
Joel's like, man.
Last of the year. Well, first of all,
I'll take the over. Last of the year. There's no way that's the last one this year.
Joel went hunting in between the guests there.
Wardrobe change.
He did change.
He went hunting, Dennis.
Happened?
He's trying to fade in the
It's
background.
my Lions shirt. It's my Lions shirt.
Lions shirt.
Yes,
Is it
it's my
camo-
Only
oh
in
my gosh, it
Detroit
is.
do
It
they
is a
do
Lions
they
shirt.
make camo football gear.
because Detroit Lions in the jungle, because I don't know
In
if
the
it's going to be
jungle.
another 30 years before we win a title again. So, and also it's 55 degrees here, Dennis. I don't know
Oh,
what
it's
it's like
warm.
for you up in the tundra.
Crazy, Joel.
Yeah,
No,
crazy.
we're
And
40. So,
season.
okay, the temperature right here, right now, definitely seasonally warm. There's not even a drop of snow on the ground. It's all gone now. Looking here, kids messing with my phone. It's 36 outside right now. So
you know
30,
what the best
but
indicator
it's gonna
was?
be like 40s today. Like it's so warm.
I paid for unlimited snow plowing instead of per push. That guy is laughing.
He's
He's
laughing at you, man.
He's probably in Florida right now.
Yeah, just killing it. Yeah.
Okay. We'll do the S&Ps and then we'll do 5 or 6 tickers and then wrap it up here on this Tuesday. Deadsville, man, we are hardly moving in the S&Ps. I'd like to see file through the pre-market high. And then just because we're not moving them much, my next target would be Friday's high at 2175. In order to have a new closing high for the move, it's right there as well. On a pullback, it might take a stab at mid-range of 48.07 and then lean on the pre-market low. Dennis, what are you seeing out there?
Well, the imbalances are mixed, and there are some sell imbalances, and that wouldn't surprise me if we do see the S&Ps leak a few points here before the open because they are more to the sell side. Just cherry picking a few here, like Square, for instance, 61,000 to sell. It's significant enough that I think it's got the stock even in the red here. So you can see it's just ticked to the red here. They're starting to look at this stuff this morning. Gap has a big buy and bounce. GPS, if you're looking at that one, 156,000 to buy. So you can see, and it's up 2.4%. You can see clearly here that the imbalances are actually pushing stocks around. On these slower days, you get one buyer or one seller. Like I said, it can really push price. And why not look at the imbalance information? Because maybe there's just not that big institution to offset it here today. Uber was trading up over 62 this morning, has leaked it all back. It's had a sell imbalance all morning, 36,000 shares. Now, these are not huge by any means, but they're notable.
Relative.
They're relatively, yeah. On a low liquidity day, you see 48,000 to sell in Shopify. You see 61,000 to sell in Square. You think, well, maybe, there's going to be a little bit of leakage going into the open, and that's an edge. I mean, I'm using information that's publicly available out there to try to get an edge here. And, that's why I'm thinking maybe S&Ps just leak just a little tad going into the open.
Dennis, do you have time to do just a quick imbalance approach real quick in one of these stocks? I mean, you mention them and we talk about it. I know you don't like to try and get out ahead of the imbalance because it could flip. Do you want to save that?
Sometimes, there's multiple ways to trade imbalances. I mean, if you've got a big sell imbalance in something, there's no news. Obviously, if there's a big sell imbalance in some stock that's downgraded or the stock that's got major news, there's a reason for that. But, what I usually like to look for is the absence of news. So I see a big seller on no news or no news that I see. Sometimes you miss the news, but you try not to miss the news. You're looking at your pro and you're trying not to miss the news. But if you've got a big sell imbalance in a stock like Square, that means the stock might open a little bit too low relative to fair value, meaning maybe, Square opens up around 76.50 or something over, and then you might be able to flip it out. So what I've historically traded and is, to be buying, and surrounding it. So, you put your buys below fair value and your shorts above fair value, basically enveloping where it is. That's one way to play it. It doesn't always work because sometimes you've got follow through. So the other way to play it is you believe the imbalance and you think Square is going to open down and you short it in the pre-market and then you try to cover it on the opening print. I mean, there's another way to play it too. So if you're a believer of the number, you think Square actually is going to open. Right now, it's indicated open at 71. That is not going to happen. What they do, it's called continuous book price. So what they do on the NYSE is they'll give you a price that clears the trade. So if they have 62,000 shares to sell, they look at everything in the book and the computer will clear it. Now, again, there's going to be orders filling in. There's going to be more buy orders coming in. So it's not going to open at 71. So it's probably going to open in the 76s, maybe even in the 77s. But one big buyer can come in and say, I want 100,000 to buy. And that would go from 62,000 to sell to 38,000 to buy, just like that. That can happen. But on this day, you don't typically see those big buyers or sellers, just new ones emerge because they're just not here. They're on holidays with their kids. So that's why imbalances can push price around a lot this week, and it's important to look at that information.
How long do you give it? Like, are you like, you're like, oh, boom, I get hit at 76.50. Are you like, okay, I'm gonna see if I can hit a 76.80, 90 bid?
Sometimes just flip
yeah.
out fast. It can get crowded if there's one that's really late to open. A lot of times those get very crowded, and then it can actually go the other way. If too many day traders that bought the open, and then they're looking all for the flip, and now all of a sudden, it gives another tank just to shake those guys out. So sometimes it's better to buy the tank of the tank. I mean, there's so many different, like
Variations
into that. Yeah, there's mechanics going into it, but other things being equal, stocks that open too low tend to be buys. Stocks that open too high tend to be sells.
Will you leave that order out there after the open to buy? Like,
yeah,
for the
well, no. So I put them OPG, opening only
Okay.
orders. I'm getting the opening print, or it's getting killed. And then what you've got to remember is liquidity is always low after the opening print. So you just throwing out an order to sell it right away sometimes will spook the stock down further. It's amazing. Like, I mean, sometimes I buy something on a fairly large stock, even like, let's say a stock like FedEx or something fairly large. You throw out a couple hundred shares to sell, the bids trade out, and the offers come in. And it's because there's no other seller in there. Your 200 shares are actually pushing the price down. So you have to be somewhat careful, in how you're trading, that you're not pushing the price away from you. Like, you're trying to sell it, you throw out your order, and then boom, it's going down on me. Like, oh no, it's tanking. Now I'm going to go lower, 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 and then boom, you get lifted, and then it pops back up. You're literally your 200 shares on FedEx after the open will push price. People don't believe that, but it will. After the 9:30 open, liquidity is very low. So, I mean, and we're talking about, extending the show, doing a different product and stuff. I mean, some of this stuff, this is what we would cover if we extended the show. To cover the opening, cover, different mechanics, how I trade the stuff. I've traded the opening for 24 years. I mean, there's a lot of decent strategies around that.
So something like UPS with a downgrade, you would say, okay, I'm out on this.
There's a reason for a sell imbalance there.
Right.
So UPS is downgraded here today. There's a reason. There's 6,000 shares to sell. Stock is indicated open at 155. I mean, this is all information that you can subscribe to. A lot of you have to pay for this information. But if you're sitting there at Robinhood, you're not getting this information. I mean,
and you drill down on the charts too, right? You look at every chart on every stock that you put an order out on. And
and that's a joke. No, definitely not. I don't look at the charts hardly at all. But I am aware if there's moves. Sometimes look at a chart, make sure it didn't have maybe it had a late move Friday that I didn't see.
There you go.
Down in the close. So I got to look at the intraday chart just to make sure it didn't gap down, because that could change things. But on a stock like UPS, there's a reason for the downgrade. So it's likely to open lower just because it's downgraded here today. It's trading down $1 in the pre-market. So lots of different mechanics. This is day trading conversation, though, which is interesting. A lot of people that listen to the show, they're investors, they're swing traders. Well, the short-term day traders listen to the show, too. This is stuff you need to know.
Okay. All right. We'll let you skedaddle out of here. Happy Boxing Day.
Oh, yeah. It's a holiday for me. I'm not supposed to be working today, but I am.
I know. Tell Laura, thank you very much for letting you work today.
Please. Okay. See you, Money Mitch.
Later, Dennis. Have a good one. Joel, have a great one yourself, man. Have a great day. We'll see you tomorrow, and tell them about tomorrow so that they all know.
Oh boy, who did I? Oh, you got me. I thought we were gonna do a few more tickers, but that's okay.
Pull it up. We could still pull it.
Oh no. This is good. This is a good call. So tomorrow we're gonna be on from 8 to 10. And we're gonna talk to some people about the end of the year. We're gonna talk to Todd Gordon at 8:10. We're gonna talk to Sahuk Manuelin from Wedbush. He's real good on the tech market. Mies Schneider at 8:50. She puts out her year-end report, and be looking forward to that. And then also got some tough questions for Cameron Dawson at 9:10. And then unfortunately, I thought I was going to have Gene Munster and Dan Ives on at 9:30, but Dan had to cancel at the last second. So if you guys, I got Gene Munster coming on at 9:30. If you guys have any particular questions, I got my questions for them. But if you have any questions for any of those experts that are coming on tomorrow, as I said, we'll be on from 8 to 10. Send me an email, joel@benzinga.com, and I'll throw those questions at them. So get ready for the open there. Mitch, have a good day, and we'll be back with you all tomorrow morning.
All right, Joel, take care. Like always, guys, tune in like always, and all information today is for informational purposes only, not to be used as investment advice, and opinions do not represent those of Benzinga. Hosts and guests may maintain positions in securities discussed today. Now to bring you over to live trading. That's coming up next. Nick Brown joins me on live trading as I get through it. Of course, it could be a little bit of a lower volume, but we'll still have a great day. Come join us on live trading. That's coming up next. Don't go anywhere, team. We got a lot more for you guys right here, of course, on Benzinga.